All right, good afternoon, everybody. Welcome to Trade School here at Ready Set Crypto. I am Doc Severson. Here it is Friday, the 21st of September. And I think some people would call this the first day of fall. I know I'm going to get corrected on that, but I always view the 21st as where the switch flips and we're done with summer. It is about 90 degrees Fahrenheit outside, so I am looking forward to hitting the pool right after this, probably for the last time this year, get what I can out of it. Pretty soon after that, what they do is they turn the pool over to the dogs. They let the dogs swim as we get into the end of September, so I want to get in there before the doggies do. Today at Trade School, we have something interesting to talk about. Okay, don't do anything silly, don't lose money. Today's topic is going to be navigating the bear to bull transition. Navigating the bear to bull transition. Now, don't misunderstand what I'm saying here. I'm not assuming that just because today was a relatively strong day in the market, we've had a couple of days in a row like this. I'm not counting this thing flipped yet, but I want you to be prepared for this. I'm seeing a number of questions today. Like, hey, should we go long? Is now the time? Do we go long? And I actually did place a couple of trades that I put into Telegram and to Discord, saying, hey, let's go ahead and get into our XMR position. Let's also get into swing trade on Metaverse. And it seems to have moved a little bit, at least. So we'll see. Haven't looked at it for a while. So navigating the bear to bull transition. So of course, if there's any questions that comes up or any comments that come up to you as we go through this, please let me know. Just chat in and let me know how I can adjust today's session to meet your needs. So this is not objective trade analysis. This is what I think a lot of people misunderstand for trade analysis, or a trigger to begin their trading is they see a great article like this, nice clickbait, looks really interesting, and all of a sudden all the emotions start coming out, the adrenaline starts coming out, the endorphins start coming out. Hey, here we go again. Should I get in? Should I get in? Should I get in? And it starts to bug you. It starts to, you start to itch. You start to look at your block folio like every 5 minutes again, going, should I get in? Should I get in? Did I miss it? So that's what today's session is about. It's coming up with a framework to make sure you're doing things the right way as you transition into the bull. Make no mistake, eventually this bear will transition into a bull. Normally it happens when everybody's given up on it, although I'm willing to reconsider if the price shows us otherwise. So let's talk about some of the things that we're going to see with a bull or bear to bull transition. Keep in mind that tops are a process, bottoms are an event. Now, this is what I've seen over the years, is that people normally short markets way too soon. Markets will just thrash around for a long, long time before they start to really head down. And you'll even see that if you go back to December and January, it took a full month for this thing to truly start printing lower highs and lower lows. And just about every other market top that you'll see is very similar to this, is that they will thrash around for quite some time. It's kind of like turning an aircraft carrier on its keel in the Pacific and doing a 180, right? Or a Williamson turn is what I've heard that they're called. So tops are a process, but bottoms are an event. Bottoms can be very, very sharp and rapid. So this is a process, right? It takes a while. It's a process. You'll never find one exact top usually, but you will find market bottoms are typically very spiky. And this, again, this is where I'm looking for that kind of capitulation where it just completely dies and then we rebound like a phoenix from the ashes, straight off of that event. So watch for an event. We certainly do not have an event right now. Nothing even close to an event right now. Is that we've seen specifically Bitcoin's been doing this kind of thing, and we get a little pop to the upside and everybody's like, oh my God, here it goes. So this is not really an event. And if this did actually reverse and start heading higher, I'd go with it. And I'd say, okay, there's a first time for everything. And perhaps we found the floor of this particular coin. So price means everything to me. Bear markets typically feature maximum pessimism at the bottom. Are we there yet? And I don't know why this number 2 is in there. Just ignore that number 2. It's an artifact. Okay. So bear markets typically feature maximum pessimism at the bottom. So this is why I'm saying, like, everybody has given up on it at the bottom of a bear market. And you'll find this with every asset. I don't care whether it's crypto, it could be silver or gold, or it could be, whatever asset that you want to talk about, is that you will always see at the very bottom, you will see people basically saying, it's over, it's done, it'll never come back again. So maximum pessimism is always at the bottom. Okay, so keep these things in mind. I mean, as you go through more and more bear markets in your lifetime, you'll start to recognize the signs for this. You'll start to say, oh, wow, it's really exciting. Everybody's really, really pessimistic. Now, I realize the first time you go through a bear market, you're going to be on the same side as everybody else. When the news is bad, then you're going to want to sell out of everything, and you're going to do the same thing as everybody else. And it usually takes a couple of times to going through these. So the first time after the market does rebound and rally, you'll say, wow, I sold out at the exact bottom. How about that? Wow, it's almost like they knew what I was going to do. And that's usually what people say. And then they go through it again and they say, well, wait a minute, there's something here. There's something to this whole contrarian theory about bear markets. So perhaps the next time I want to be looking to buy down here instead of sell. And I will say that this is one of the hardest skills ever to learn as a trader, because your self-defense, your self-survival instincts will kick in every time. And it is extremely difficult. It's extremely difficult to be bearish on the market that's going like this to the upside. And it's extraordinarily difficult to be bullish on the market, which is capitulating. It's one of the most impossible things to do, but you will find that any institutional trader or professional trader or somebody that's been around this for a number of decades has sort of got this figured out, kind of knows how the game is played, and starts to think opposite. So every day is opposite today, or every day is opposite day to them. When everybody's on the one side of the boat, they're on the other side of the boat, waiting for the boom to swing over and knock them all overboard. All right, point number 3. Normally, we do see a flush at the bottom to create capitulation, which we have not seen yet. So I've talked about capitulation. Normally, we see this like just straight down. Haven't seen it yet. Haven't seen that high volume. We have seen the high volume. Lately, what we've seen is an enormous amount of volume, and it's quite different. And that does speak something to me. Here's the other thing, though. This is why it's very difficult right now. A lot of very positive news. There's a lot going on in this space. Look, this time a year ago, there was Bitcoin and a bunch of small little projects which had some potential. Ethereum and Litecoin and Ripple and everything else and Neo and now a year later, all of a sudden we have some very, very serious projects which are on the verge of creating service revenue. So service revenue is where they're actually billing somebody for something and actually bringing in cash. However that's done, they're providing value to a larger and larger number of people, aside from just the speculative value of the coin itself. This is huge. And this is what took so long with the tech bubble back in 99, 2000. When it finally topped out in 2000, it took years before the NASDAQ or tech market recovered from that, because it took a long time for people to figure out how to monetize the internet. you think about it now today, it's like, well, how hard is that? Well, it was really hard at the beginning because people couldn't really figure out how to put this all together. And in fact, even Amazon, which we hold to such high esteem and knocks on our door daily, was not a profitable company for a long, long time. Now, in my mind, that's just accounting gimmicks, because what they were doing is they were reinvesting all of their profits right back into expenses. They were reinvesting and reinvesting. They knew the potential. So sticking every cent of every profit back into the company to rebuild architecture. And now we can see the hockey stick growth that they've had. Exponential it is. Okay. I think we're on the verge of something similar here with crypto. So price is still an instantaneous evaluation of supply and demand and nothing else. So I don't care what you think about your coin. I don't care what you read in some article about what somebody says about your coin. I don't care anything about that. Everything is priced into the coin this very second with all available information. It is completely 100% discounted, priced to perfection based on all available information this very second. So this is where a lot of retail traders or a lot of newer folks get it wrong, because they'll see some article come out. Hey, look at this great article. Look at all this positive news. And the price doesn't go anywhere. Oh, well, that's old news, right? Most institutional or bigger players are getting their news from the source itself, right? They're knocking on the door and saying, hey, what are you doing here? Not necessarily waiting for some reporter whose job it is to create clicks so that they can sell ad revenue. That's how the whole business works, guys. If you haven't figured that out, get on board, right? This is all the financial media is just about creating clicks and selling ad revenue. It's not about creating some new information. So it's all about headlines and it's all about clicks. How we doing out there? Anybody out there today? So I think I got a couple folks on board. So a lot of you are probably going to be watching this after the fact. So this will still be appropriate for tomorrow and the day after. So I'd say your biggest challenge is going to be, if we do start to transition into a little bit of a pop here to the upside, it's going to be FOMO. It's going to be the fear of missing out. Like, what do you do? And I've already started to see people asking questions like, hey, we're starting to trend a little higher here. And what should I do? What should I do? So we're going to go over to the charts here in a minute, and I'll walk you through some elements of a framework that you can start to put together to determine whether or not you should get into these things, right? So the first thing is going to be FOMO. You're going to be reading these articles. You're going to see the price up 30%. Remember, 30% up from essentially nothing is, not that big of a move compared to some of the prices that we're at. So that'll be your challenge. So what you have to do, you got to get ahead of this thing. Get ahead of this animal. Don't allow your emotions to trade for you. You got to define how you're going to enter the bull ahead of time. This is called a trading plan. I've said this before. I'll say it again. There's no medal that's given out for getting the very bottom tick. So a lot of us are like, hey, is that the bottom? Is that the bottom? Maybe we should buy now. Maybe we should buy. And then all of a sudden we realize, hey, it's a larger time frame trend, and we eke out a new bottom. All right, is that the bottom? Is that the bottom? Well, I don't, no, it's not the bottom. It's trying to catch a falling knife, right? So there's no medal that's given out. Don't think yourself a hero if you end up getting the very bottom tick. Nobody's going to care. It's going to be good for your ego, and that's about it, because more than likely you're not going to be able to hold on to this position through the first shakeout. So don't worry about this. Wait until you actually get a chart which is trending higher. It will be much, much easier to trade once a primary uptrend kicks into gear. The bottom is going to be really spiky. It's going to be really hard to trade. You're going to get shaken out. Don't worry about it. We got plenty of room on these things. Prices are depressed right now, and they've got lots of room to run when they finally start to do so. So there's no medal given out for grabbing the bottom. Your job is to grab the meat of any swing. What do I mean by that? Well, look, if something starts to trend, you'll get an initial shakeout down at the bottom here, perhaps, and then we'll start to progress into a primary uptrend. And it'll even go completely parabolic at the very end, which is a warning signal for you that you should step back from it, perhaps take profits. But I don't want you to try to get the very bottom here. I don't want you to try to wring out every possible Satoshi out of every single trade. All I want you to do is to play within the meat in the middle. Get yourself your fair share. Sell too early, buy too late. It's okay. Don't be a hero. Sell too early, buy too late. It's okay. Market will be here tomorrow and the day after and next year. So give up on the idea that you're going to get the very exact bottom or the very top. Trade assets that are moving higher in price. This is driving people crazy out there. Why aren't you trying to buy the dip? Why don't you buy the dip? I want to wait until stuff starts moving higher in price. It makes it so much easier, right? It makes it so much easier. It's like trying to take off in an airplane with the engine on idle. It's not going to work very well. But it's easy for a plane that's already has taken off and already has gained altitude to gain a little bit more altitude. It's always getting off the ground is the toughest part. Okay, so let's look at the charts. Let's see what we can do in terms of building a structure and a framework that we can add to help us determine this. Okay, before I get into this, any questions? Let me know if there's any questions on what we've covered so far. Okay, so one of the first things that I will do is let's go down to straight price action. Let's just go down to straight price action. Okay. So you should be able to see whether or not what the trend is. If you don't know what the trend is, then you don't have a large enough time frame. So some people will say to me, but it's an uptrend. It's an uptrend, Doc. And because they'll be looking at this over the last 3 days, and they'll say, it's an uptrend. No, it's not. It's still a primary downtrend on the weekly chart. Got a lot of work to do before we can do that. It's kind of like a child overcoming the mass of an adult if they're walking together. Somebody's going to win. Okay, so we have to know what the trend is. And I will say this does take a little bit of practice, and I'm going to be giving a class starting next week on how to read price action better, because it's one of the fundamental skills, I do believe, of evaluating markets. But one simple way that we can look at this is just by looking at the weekly chart. Do we have a series of lower highs and lower lows? And the answer is yes, although we're starting to build into a triangle here. Starting to build into a little bit of a triangle here as the support level at about 5,800 to 6,000 is holding fairly firm for right now. Okay, I want to see this move. The volatility's just kind of come out of this thing. So I don't care if it goes up. I don't care if it goes down. Either way, eventually it will go up again. So for those of you that have difficulty reading the trend, one of the first things that I want you to consider doing is using a moving average. Okay, and this is why I will put this up. So we're going to go over to indicators. We're going to go to the built-ins, and I have to go hunt down for this. We can just use a simple moving average. Let's see if I can find out where it is. Well, I think it's just a moving average. It implies a simple moving average. Let's make sure there's nope, that's it. So just moving average is implying a simple moving average. Now, there's also exponential, which is right. Let's see where it is. Might be moving average exponential. There it is. Yeah, so simple moving average And I'm not going to explain the difference between the two right now. That is a exercise for the viewer. So let's go ahead and go into settings. Let's make this thing pop. So first of all, we have to set this, and I'm going to set this for a length of 200. So I'm going to look over the last 200 days, or if this was an hourly chart, I'd look over the last 200 hours, which is more than a week, but 200 days is perfectly fine for right now. Okay, so there it is. There's that moving average. Now it's not popping out very well, is it? It's kind of a slate gray color that is hard to see. So I will make this thing pop as best I can. Let's make it huge. Okay, so we're going to have this green line here. And that's our 200 period moving average. Now, let's see how this thing works. Let's go over here and let's note how during a bull market, and I'm going way back here, during a bull market, look at how well the price stays above this bull market. This was kind of the bear here. This is kind of the end of the bear. There was the first capitulation, and then we had another capitulation here, and that was the end of it. So this is, I believe, the transition into 2016. And notice that for this entire bull, the price stayed above that 200 period moving average. So that's a good filter, isn't it? You generally want to be trading something that's above the 200-day moving average. And then eventually it went, berserk here and runs way, way away from it. Now, be cautious when you have, think about this. The 200-day moving average acts as kind of like the mean. And when the price really, really runs far away from the mean, it's almost like a rubber band is attached to that moving average. And it does get snapped back. Okay. So we actually started to trend under the 200-day moving average back in March. In early March, we put in a significant lower high, and then it was all over after that. So it's never been able to get above the 200-day moving average yet, even though it's come up and come very close to it. You'd think somebody was watching it, wouldn't you? Okay, that's truly the case, people. This is a well-known study. Everybody's watching this thing and are using it to either provide support or resistance. So if we do get the price above this 200-day moving average, you can bet that we're going to get one heck of a squeeze on this thing. And this is why I've been using the 200-day moving average on my crypto screener, looking for things that are trading above the 200-day moving average. Right? So we just have a few of them right now, like Ripple, Stellar. We have Metaverse is above there, those kind of things, right? So that's kind of a reason why I'm doing this. So is now a good time to get into Bitcoin? Well, this may be a bottom, and it may be a higher low, but I think I can afford to wait until it gets above the 200 before I start going after it with any impunity here. Right, so let's go through this and let's start looking at some of these other assets. Now we have been chipping away. Now, if you're going to one of the things I talk about in the portfolio management stuff is like, well, look, we can use this bear to sell into the lows, right? We can use this bear to acquire assets for something that we expect to be above here someday. That's a whole different issue versus a swing trade. So don't confuse the two. Understand whether you're trading or you're investing. So most of what I'm talking about here is actually trading for swings or trying to find things that we can swing into. If you want to use the bear to accumulate assets by selling into this, okay, it's not easy. It's difficult. The risk is that what is low can become much, much lower. So this is relatively aggressive, trying to acquire inventory into a bear, right? So Ethereum is still well under the 200-day moving average. We have Litecoin, which is still under the 200-day moving average. Here we have Ripple. Now, a lot of people are asking me about Ripple today. Should we buy Ripple? It's above the 200. Okay, a couple of good things here have happened. We have seen the price rise above a descending trend line. So descending patterns break to the upside eventually. Price is above the 200. Does that mean we should get into it right now? Well, no, this is just a filter. The 200-day moving average is just a filter. It's to let you know what's trending higher versus, and it doesn't even substitute for price action, although you can clearly see that this is printing a higher high off of a higher low. So that's good. So yeah, we'd eventually like to get into this, but I'm not going to do so just yet. And I don't want to change this because if I do that, the 200-day moving average will. So we'll look at different ways to evaluate an entry later on. So just about everything that we have here is still well below the 200. So here's Stellar. Now Stellar is above the 200 now. And look at that. We don't have much over 200 days. It's 200 days was in June. It finally started being able to print enough candles to throw off a 200-day moving average. So here's another one which is above this, but again, this is you can see from the very large upper wick of this candle that this is turning into a little bit of a shooting star with probably another 6.5 hours to go in the trading day. At this point, there's some overhead supply. People are selling into the move. So this is a little bit premature. And I think across the board, everything I'm going to look at here is, for the most part, in our portfolio, still well below the 200-day moving average. So if you want to, you can look to, now here's XMR, which is Monero. So we did say, hey, look, this is putting in a higher low. This looks like a good entry. We've broken this trend line. We're starting to put in higher lows and higher highs. This could reverse here. It's an aggressive entry. We're trying to use the bear to acquire assets at discounted prices, right? So there's a very specific reason for us doing that. Okay, but just about everything here is still well below the 200. This one doesn't even have a 200. Binance Coin, still below the 200. VeChain doesn't have 200 days to even look at. 0x. So a lot of these are still kind of suffering right now, even though we're getting a little bit of a pop today, right? So some of these are getting a little bit of a pop, but be careful of these because these are typically ones that pull in a lot of retail money and then they get sold into. Always wait for the pullback. Always wait for this to slow down. Typically what I will do here is to wait for a consolidation to show up. If this consolidates up in this area, if this consolidates, that's good. So an example of a coin that has been consolidating, let's see, over to our swing trades, is the mighty Doge. Okay, so it was getting into FOMO land here just a couple of weeks ago. It's well above the 200-day moving average. But we want to wait for this to consolidate, and it's doing that. And so what we'd look for is for this bull flag, and this is setting up a bull flag right now. We could do this either one of two ways. We could wait for the breakout from the flag above this level here, or we could use something like an oscillator. We could use either an RSI, although an RSI sometimes is very stingy. We could use a stochastic oscillator to show us when the next hook was happening, and take it long within the pattern, try to get an advantageous entry, and then hope that it breaks out. Probably a more conservative way is to wait until this thing is fully energized and take the breakout. Okay, so let's go back to our portfolio again. That's one of the things that I want to stress to you guys right now is that as we transition from a bear into a bull, we haven't seen all the regular signs that we normally would see for a true bear market termination. That doesn't mean that the price can't rebound from here and keep going. This is the ultimate arbiter of value. And especially if a couple of things happen here. If we see Bitcoin trading above 7,400, number one. Number two, if we see it trading above this descending trend line, that would be significant. And by doing so, it would almost certainly trade above the 200-day moving average. And if it does that on this swing, it's going to do so off a higher low. And that, again, is also significant. So I'm seeing a lot of very positive things. What combats that, though, and what goes against that is this weekly downtrend. So until we kill this weekly downtrend, so that's what I call rule number one of price action, is that larger time frames dominate the trend. They govern what happens with the smaller time frames. But reversals happen actually from the inside out, which is like getting a virus into your system. All it takes is one virus, finding a host cell, replicates in that host cell, and then all of a sudden a bunch of other viruses go out, find host cells, and next thing you know, you're really sick. But it all happened from one little virus. Reversals happen like that from the inside out. Okay, so use your 200-day moving average. If you can't read price action yet, if you don't understand what trends are and how to evaluate trends, use your 200-day moving average as a filter. Don't take longs unless you're trying to use the value of the bear to get discounted inventory and you're willing to be aggressive in pursuing discounted inventory. Certainly, though, if you're swing trading, wait until the asset is above the 200-day moving average and or an uptrend, a primary uptrend, and you'll make things much, much easier for yourself. Okay, that is kind of what I wanted to talk about today, the transition between the bear and the bull. Everybody's excited. We've had a couple of different days here, a couple of straight days of positive price action, a lot of good news that's out there. Perhaps this is the one. Perhaps this is the one. I don't know whether it's the one or not. And this is why I frame things in. This is why I say, hey, wait till it gets above 7,400. And then we'll know. Do I care if I miss out between 6,800 and 7,400? No, I don't really care. I'd rather let this thing flush itself out, and it may actually run above that. It may run up to 8,000 by the time I get a chance to get on this. That's okay. That's okay. This is what markets do. All right, any questions? Let me know if anybody has any questions on board. Otherwise, if you're watching this through a replay later on, let me know if there's anything that didn't make sense to you, or if you'd like to see any other topics within Trade School. Next week, keep in mind, I'm going to be doing a big class that's on the fractals. So the multiple time frame trading, price action, using the CHOP index, understanding energy. That's what I call fractal energy trading. And we're going to apply it to crypto. We're going to use TradingView and show you how to do that. All right, my friends, looks like that is it for today's session. Thanks again for joining me here today. And I hope you guys have a great weekend. We'll be back here on Sunday with the weekend report. You guys take care until then now. Bye. There goes a sight from my soul.